Welcome back, everyone. We have CYIOS Corporation, ticker symbol CYIO. It's a rapidly growing and dynamic company focused on innovative health and wellness solutions. The company recently completed the acquisition of Noir Medical Supplies, a strategic move that enhances its capabilities in delivering high-quality medical and PPE products to meet growing demand while driving revenue expansion. Presenting today is John O'Shea, chairman of CYIOS, and Ralph Amato, CEO of Noir Medical Supplies. Welcome, gentlemen.
Thank you. Thanks, Anna, for having us again and the update. We've got some exciting news actually to bring forward today. We've got a revenue update, but just before we get into that, the acquisition has gone quite smoothly, and I believe that we're working really, really well together. Would you agree with that, Ralph?
Yes, and thank you, Anna, for that wonderful introduction. We're moving along, and we're doing our best to keep it going as quickly as possible.
So last year you had revenues of around 4 million. This year you're predicted to do 7 million. Pretty impressive. What do you think the revenue targets will be now with the new update, and how have you been able to achieve that?
Well, first of all, it takes a lot of hard work. We did 4.55 million last year. Our goal this year is we're trending. It looks like we'll definitely do more than 9 million for the year. That has been done by keeping our prices low, getting the product our customers want, and making sure we listen to their needs and going out and finding what they need. We've also started to make arrangements so we're not subject to other manufacturers. We're going to be actually manufacturing some of our disposable products through a company called Top Tier. They'll be making it for us, further driving down our costs and putting us more in control of our future. And again, making it easy for us to fulfill what our customers need.
So did you increase the volume as well as obviously drop the price? So you're actually able to get more supply in the market? And how is the supply in the market? Is there a lot more room to move?
There's plenty of room to move. What we did was we believe by lowering the prices, we move to first in the line. Now, that is not always true in every single situation. But in this particular situation, we feel that by cutting costs, it's been able to push us in our sales volumes. We've been able to supply the inventory. Fortunately, there's been plenty of inventory available for us. We've taken full advantage of it. And again, by working with overstock or distressed or direct purchases from manufacturers that are looking to move it, we put ourselves in first place, because being dependable for both our suppliers and our customers makes us hopefully a continuing valuable asset for them.
And how many suppliers do you actually work with on a monthly basis?
Some months it could only be 2 or 3 based on fiscal restraint. Some months it could be 10. We're a growing company. We're always concerned about managing our inventory, managing our financing. Trust, transparency, and dependability is what I consider to be the 3 most important things, because if I tell somebody or I tell a customer, listen, you'll have your product. It's okay if you're a day late. That could happen because of any reasons. But if you don't deliver, they become very upset because they rely on us. So trust is important. So we work with 1 to 10 on a monthly basis. Right now, that's all our system will allow us to do. We need to invest additional money in technology to be able to utilize more and more inventories, because the sky's the limit on what we can do.
Yeah. So tell us a little bit about the industry as such, you know, the oversupply industry and how that works, and where the growth potentials, opportunities are within that industry.
Well, sometimes our industry preys on weakness. Somebody runs into fiscal difficulties, they need money, they need to dump an inventory, whatever it may be related in our field. We're dependable. We generally say yes. We have restrictions, dating, expiration, quality of the product, et cetera, et cetera. But it's all built on relationships. When a major corporation decides they're going to liquidate their inventory, they've become to rely on us and several of the other companies I work with to say yes, and to be able to take large volumes of inventory, sort it out, repack it, not in the sense of repacking the product, but making it for smaller quantities for smaller customers, and then selling and delivering it on time. And that is a very important part in today's economy because people are looking to raise cash and they can't afford to have inventory sit on shelves. So sometimes they have to push it down to smaller distribution systems to be able to get it out to a wider market.
Right. So obviously the share price for CYIO at the moment doesn't reflect what would be some normal calculations in regards to a publicly traded company. But that being said, and you're on the ground, where do you see your role to really help the business grow, and what would be the key focus for you to be working on? And I know fundamentally you're probably going to say revenue.
Yeah, well, John, we've had this discussion about stock pricing and revenue. I firmly believe that revenue drives stock price, and revenue, profitable revenue. Let me further clarify that.
Yeah.
Right now, the situation is we're looking to grow our sales. We're looking to broaden our customer base. We're also looking to broaden our supply base. By generating sales through additional inventories, CYIOS's revenue will continue to grow. So my goal is to keep growing the revenue and pushing the revenue number, hopefully pushing the price of the stock up. Yes, that is a very important thing for all of us. But again, it's the revenue, in my opinion, by broadening revenue profitably is how we'll be successful.
Right. And so just in the final moments we've got here, future acquisitions is one target, and we're currently a long way down the road with those discussions with a group as mentioned. And there's obviously growth in regards to IT and making ourselves more efficient. So in summary, you would see that we're a cash flow strong business with growth potential, and that we're going to be starting improving our processes and procedures to reduce the overall costs.
Well, we've driven our costs fairly down. We operate very, very leanly. We are going to expand our internet presence. We are tidying up and getting ready to roll out the next phase of our website. We've now decided on which inventory we're going to put on there. So the idea is to have a selling machine going 24 hours a day, not just relying on a sales staff. We are looking at marketplaces to expand into. Technology is going to be important. There's going to be some investment made in technology. That's going to be the driver of a lot of our future growth, because as we get bigger, we want to keep the labor down and become more efficient by automating more and more tasks. So again, grow the revenue, cut the costs, the classic disruption of how to improve a industry that is fully ripe to be improved because medical costs are way too high now.
Yeah. Look, that's great. And I think it shows there's real strength in what we're doing, the scalability in what we're doing, and then there's opportunity for future growth with these sorts of acquisitions you're talking about. The numbers are very exciting.
So the number we're looking to do, and with the acquisition of the next company, is what we're looking to do. It's an estimate. Nothing is guaranteed. I don't want to misguide anybody. The goal is to triple what we're currently doing now, and having that ISO certificate gives us the ability to do that.
Yeah, and they're big numbers, and we're excited, and we're here to help you do it. So, which is fantastic. So, thanks for everyone for listening in and joining us. We look forward to another update shortly.
Thank you very much. Thank you to everybody, and everyone have a wonderful weekend coming up.
All right. Thank you, John. Thank you, Ralph. We'll see you again soon.
Okay. Thank you. Bye.
All right. Stay tuned, everyone. We'll be right back.